BlackRock zooms in with $3 billion in assets under management. We're breaking that down for you guys and give you a framework of where the market might be going for crypto and Bitcoin. Don't miss it. My name is Paul Barron. Welcome back into Tech Path. All right, so we'll get started. I want to thank our sponsor, iTrust Capital. Get your Bitcoin into iTrust Capital or go ahead and get a crypto IRA and get your Bitcoin there, because I feel like BlackRock's about to buy it all up for some reason. And one of the things you can do is you can do your own self-trades inside iTrust. And it's very simple. You can self-direct, go into altcoins, precious metals, Bitcoin ETH, etc. All you have to do is click the link down below. You'll get a $100 funding reward if you use our link. It does help the channel, so try to do that. We appreciate it. All right, so let's go into a couple of lead stories here. The first one I want to hit are Wall Street bulls preparing for a rally. Bitcoin and Ethereum purchases are increasing, and this, of course, is coming in from a lot of different sources, but the primary points that they're hitting on right here is a survey that believed Bitcoin and Ethereum will rise. I think everybody's kind of on the same plate there with that. Bullish sentiment driving toward the weight of digital assets in portfolios. I think that also is being brought in just because of the success of the ETFs. And then you've got Bitcoin and ETH in terms of the accounts of 58% of the participants' digital asset portfolio. In the previous surveys, the rate was 50%. So an 8% rise in a very short period of time. All this good news for what's happening. But yet at the same time, we're still kind of hovering around a 22 to 2300 Ethereum. And that is the question. Why are we not seeing a breakout? Do we still see pressure coming in from the Fed? Do we still see pressure coming in from the looming issues of the SEC? All of this still plays in to what is going to happen on the next few months. A couple other things right here. BlackRock, of course, spot Bitcoin ETF now holds $3 billion worth of Bitcoin. This is insane for this to be out less than a month. They're up $3 billion. Remember, this continues to climb. At some point, we will see the intersect between Grayscale and what's happening with BlackRock or Fidelity. I think those would be the two to keep a very close eye on. Sentiment right now, we've got our ETF tracker. Make sure and check it out over on our website. Just go to Paul Barron Network and go to the Market Sentiment Index. You can actually get to an ETF tracker. A couple of points I do want to hit on here. BlackRock spot Bitcoin ETF overtakes Grayscale's GBDC in daily volume. I think this is the bigger point here is that if this continues in terms of daily volume, then the pace in which we'll start to see this around maybe GBDC starting to reposition their rate, which is still holding it at 1.5, to maybe is it going to be too late is my question. I don't know. That's the question I think everybody's asking right now. But Fidelity's FBDC was third right now at 171.84 million in volume. GBDC came in at 292, and of course BlackRock was 303. So big numbers right there on spot for sure in a good period of time. Now, if you know people that are investing in Bitcoin right now, are they using ETFs or are they trying to get direct exposure? Because I'm finding a mix between these. We have our mastermind group that we do in real life where we do high net worth individuals, business owners, and we teach them about technology and Bitcoin. The one I had last weekend was the biggest one yet that I've conducted, and everybody was talking about ETFs. And most of these business owners were talking about going into ETFs. So I'm just wondering if that's where it's coming from right now. Patrick Hansen, who is one of the experts that kind of covers the MiCA situation over in Europe, is talking about the U.S. Bitcoin ETF spilling over to Europe. So these last weeks, CoinShares, WisdomTree, and Invesco all announced fee cuts for their physically backed Bitcoin ETFs. Prices were cut in half. They're more aligned in competition from the ETFs in the U.S. So this is a worldwide phenomenon that's starting to happen with these rate cuts. So what was happening in Europe from an ETF standpoint is now starting to have to get competitive because globally, as I've said all along, the market for these types of products is the U.S. The U.S. will lead the way with these, and I think they'll continue to dominate. It's Wall Street. It's going to dominate the world financial market without a chance going forward. Now, there are some things that are bad, and I would say good and bad. If you think about just the job numbers, here's a good example. U.S. added, let me kind of zoom in on that. U.S. added 353,000 jobs in January versus what was the expectation, about 187,000. I put out a tweet today that showed that along with some other sentiment numbers. Go check my Twitter, just at Paul Barron. But it goes into a lot of detail around these. Plus, the December jobs report was revised up from the 330 from the 216. So we got a bad jobs report in December. I'm wondering if they're going to revise the current job report from the 353 up. And if that is the case, this would be a problem because this breaks a 10-month trend of downward revisions. Has the economy maybe done its reversal? And are we now in a position where it is up only? I don't know. This is getting very interesting for sure because you've got mixed signals coming in. You've got PayPal among, a handful of other tech companies that have laid off over almost 150,000 jobs in a matter of just the last 90 days. And that's something that will continue, I think, of repositioning, much like what I think the tech companies are doing, which is figuring out that they can do a lot more with less. And that, I think, may flow out into some good side of things for maybe things like Web3, which is meaning more devs and things like that going in. If they can afford them, people will have to take a pay cut probably from those, those Silicon Valley jobs. So this will be one to watch. Kobe EC letter kind of hits on it right here. It's worth noting 5 rate cuts in 24 is still far more than the 3 that the Fed is guiding, basically saying that we're going to do 3 most likely. And mainly with what's happening with these job reports, I definitely think March is off the table. May is still a possibility considering the CPI numbers. If we continue to see softening of the CPI, but if we see a reversal on the CPI, this is going to get really sticky because rates are going to be higher for longer going into a presidential election. And this will slow overall economy growth. But will it slow the markets? Because the markets seem to be kind of just pinning their ears back going forward. That's the real question. Speaking of a little bit of that, just in, former president says he's going to get rid of Powell. Listen into what he had to say.
Mr. President, back to the economy for a second. Would you reappoint Jay Powell?
No, I wouldn't do that.
You wouldn't reappoint him?
No.
Because he missed inflation?
He did miss, but no, I wouldn't be inclined.
Who's your choice for Fed chairman?
I would have a couple of choices. I can't tell you now.
I just wonder if Trump would fire Gensler. That would be the one to go for. But still, a deal with reassessing here. And I would agree. I think Powell is, and it's not just nonchalantly. We all know the amount of rate cuts that we saw in a short period of time caused the ridiculous amount of inflation that we got to experience personally. And I think a lot of people have started to feel that. Magnificent Seven, though, has not felt that. And if you look at them, Magnificent Seven market cap now equals GDP 11 major world cities. And this is coming in from Bank of America at 12.5 trillion. Combined market cap of Microsoft, Apple, Alphabet, Amazon, Nvidia, Tesla. These are crazy. And then Meta comes in and absolutely stuns the market with performance that I don't think many people anticipate. I think people thought it would be better. They didn't realize how much better Meta would come in. In fact, they go into a little bit more here on what Meta's potential is. Listen into this clip.
At $3,500 and possibly more because the case is about $200 and you might want some of the accessories and if you have glasses. I mean, there's a lot of, this is a pricey item.
There's some add-ons. There are absolutely
so
some
you
add-ons.
have the Oculus, the Quest over here.
This is the Quest 3.
The Quest 3.
Yep.
How much is that? What's the price tag on that?
This starts at $500.
Okay. So today, if you had an option between buying that and buying this, and I know that the Apple folks would say they're not in competition with that, and I'm sure the Meta people would say that they are not in competition with this at the moment.
Look, is it the same category? Absolutely. But this is really like looking at those early days where this is the BlackBerry and that is the iPhone. And that, look, there's a much bigger price gap right now. But when you put this one on first.
Right.
Look through it.
Here.
Right? Well, this isn't powered on now. You have the whole thing. But look, feel it.
But the weight, I've used this before. I don't want you to throw it because I'm scared that you'll
throw it live on air. Here we go.
Here we go.
But you will feel the difference.
Right.
And it's just not comparable. Yes, you can do more things actually right now in that Quest. You can play more games.
Right.
You can do a lot more things. But this is the platform that they're building on for the future.
All right, so platforms that they're building on for the future, Apple, of course, showing their cards around the potential of what the Vision Pro can do. I think this all plays in, and then Meta, I think, just stole the show and has absolutely just crushed the idea of where the market is going, and that is more VR versus what we've seen in AR. Now, it doesn't mean that Apple's product isn't going to continue to climb and be an opportunity. The question will be for crypto is when do we actually see an NFT and or an in-game asset start to make its way into AR, VR? When that occurs, some winners will start to show themselves for sure. Now, you look at AI and you think about the impact it's going to have on crypto in general. You can talk about all sorts of projects out there that are in the compute layer, things like Render, which we talk about often here. Listen into this clip because this was a Silicon Valley Ventures investor talking about this.
I think the last couple of years, we always think, tech has run its course. Thank God you're out here, in this part of the world and in this business, because it's been the Magnificent Seven, and here comes AI. It's just, you're once again in the category. You were in cloud early. What's most exciting to you right now?
Well, just to your point, it's kind of amazing. I've been in this business for almost 40 years, and every time you think it's over, something new comes along, and this AI boom is really something foundational. It's a lot. It reminds me a lot of, mobile or cloud, and it really is changing a lot of things, and it's really driving kind of a new generation of technology. And I really think.
All right, he hits on a few points there. New generation of technology, something foundational. It's kind of like what happened when mobile really reinvented how computing would be done. I think that's where we are with AI, and what it's going to affect most likely will be mobile computing and also AR/VR. Those are the two categories. Now, what in crypto is going to start to go into the AI direction? Watch out for that. And I think this is something you guys have to pay attention to, because we probably will do more, not probably, we will do more videos for you guys to understand the number of projects that are out there that could align with this, especially around the future of where crypto is going. All right, a couple other things I want to hit on. Here's Patrick McHenry seeking to get measures to repeal the SEC's accounting bulletin. A couple of points they wanted to hit on here. Bipartisan support for this SAB 121 undermines consumer protection and leaves customers' digital assets vulnerable. And they're trying to get this repositioned. I look forward to getting this measure across the finish line, so good deal. Overturn it. Nation's largest banks are now subject to the highest level of prudential requirements. Unfortunately, significant capital requirements contained by the SEC's SAB 21 have effectively precluded banks from being able to safely offer digital asset custody services. What does that tell you, guys? It tells you that the banks are coming. And if we get digital asset custody services within banks, it's going to get competitive very quickly. That will be, I don't know if this is going to be good for Coinbase or bad for Coinbase going forward, but I think the exchanges are going to have to start to become what we've always anticipated, and that is become the bank. So when you think about altcoins, because this could be one of the factors that really plays into the cycle of success around crypto, this is what the last dip on altcoins did before 2020 halving. It was a black swan, 70%. Looks almost flat a few years later, and it is the moment to load up on if you hadn't already done this. So if you think about that, this is what Elio is talking about, is this back here. It's almost insignificant compared to where we've seen these markets roll. And if you look back at where even projects like Solana, Avalanche, et cetera, back in the day, are we going to see those kinds of breakouts? And that's the question mark I think that a lot of people are asking right now. We already know that we're going to see kind of the blue chips, these top 20 tokens do very well. The question is, which ones are going to be the next top 20 tokens that come out of nowhere? I'm watching for those. If you're not in our Diamond Circle, get in now, because that's one of the places where we actually reveal those kind of things. Do additional research, drop some additional content, make sure and click the link down below and get in on that. Of course, if you guys want to catch me, it's out there on X, @PaulBaron. We'll catch you next time right here on TechPath.